The way to make money dividend growth investing is not as hard as most investors might think. And with high quality dividend growth ETFs or exchange traded funds being so available at our fingertips in the modern day, investors now have no excuses. And it's never been easier to spot good buying opportunities. Now in this video, we're going to dig into 3 different dividend growth ETFs that offer almost everything dividend growth investors like myself are looking for, and why each of these ETFs could be offering a massive buying opportunity, especially while some of them are beat down in price. Now if this intrigues you at all, make sure to please stick around, drop a like down below, and let's get into the first ETF. Now the first super high quality dividend growth ETF that I'm honestly a huge fan of and pretty much all dividend growth investors like is VIG or Vanguard S&P 500 ETF. Now this ETF is popular for multiple reasons, but one of the main reasons on why investors, long-term investors especially, like it is because the expense ratio is dirt cheap at just 0.03%, which, side note, is half the price of something like SCHD. Now VIG's product summary is pretty simple. It says it invests in stocks in the S&P 500 index representing 500 of the largest US companies, and the goal is to closely track the index return, which is considered a gauge of the overall US stock returns. Now, one of the main reasons why dividend growth investors love investing into VIG consistently over a long time frame is because VIG does offer dividends and it offers huge growth. Looking at VIG's performance on the max time frame, it's up 287% more or less, and that's not even including dividends. Now, another reason why investors love VIG is because, of course, it has massive growth potential. It pays a nice dividend, but it also allows investors to sleep well at night, knowing the holding breakdown is, of course, the S&P 500, which are some of, if not the best companies in the entire world. Now, the top 10 holdings of VIG are very familiar faces like Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla, Meta, Berkshire, and ExxonMobil. Now, the holding breakdown when it comes to VIG is also very favorable for investors out there that like stability but also like growth potential, considering the majority of the ETF is technology at 28.12%. Then the next biggest sector is healthcare, financials, consumer cyclical, communications, industrials. Then we have a small amount of consumer defensive, energy, utilities, real estate, and a little bit of basic material. And of course, things can change in the future, but for the most part, things like technology, healthcare, and financials have grown pretty well in the past, say, 10 or 20 years. Also important to dividend growth investors like myself is dividends, and VIG has a 1.56% or so starting forward dividend yield. Now, even though VIG is only yielding 1.56%, the amount of growth potential this ETF has and the amount of dividend growth this ETF has, which basically means how much in dividends this ETF pays year over year over time. And over the last 10 years, we're talking a 7.11% dividend growth rate, 6% on the 5-year, 5% on the 3-year, and in the last year, 7.23%, which means simply put that investors that buy into VIG today are most likely going to get paid more in dividends next year, and the year after that, and the year after that, and so on and so forth. The next super high quality dividend growth ETF that I've been buying like crazy over the last year or so is the Schwab US Dividend Equity ETF, or SCHD. Now, SCHD's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. And although, like we touched on earlier, SCHD does have twice the expense ratio of VIG, a 0.06% expense ratio, for a long-term investor that wants to gather a ton of shares is still honestly pretty cheap. Now, SCHD definitely lives up to a dividend growth ETF name, considering that it's had some massive growth in the past and also pays a nice juicy dividend, which we're going to be going over here in a second. But in the max time frame, SCHD is up around 168%. And even though SCHD has been sort of lagging over the last year or so, I personally think that because of this ETF's index that it tracks, this ETF is going to skyrocket over the next 5 or so years. Now, SCHD has an interesting basket of holdings, around 100 different companies. The top holdings right now being things like Amgen, Verizon, Broadcom, abbvie, Coca-Cola, Merck, Pepsi, Cisco, the Home Depot, and Chevron. And I say it's sort of interesting because some investors, including myself, aren't necessarily in love with every single one of the holdings, especially the top holdings in the Schwab US Dividend Equity ETF. Also important to note the holding breakdown. The majority of this ETF is things like industrials, healthcare, financials, consumer defensive. A smaller portion of this ETF is made up of technology, which of course is probably going to hurt it as far as growth goes during times in the market when technology gets a lot of love. Then the rest of the ETF is made up of things like energy, consumer cyclical, communications, basic material, and utilities. But one of my favorite things about SCHD being more of a dividend income focused investor, it has a starting dividend yield of around 3.7 to 4%, which is super helpful to generate a lot of cash flow pretty much from the minute you start buying shares. But with SCHD, it's not just the fact that it has a nice healthy starting dividend yield, it also has massive dividend growth just like that of VIG. SCHD's dividend growth, to be exact, on the 10-year time frame is 11.11%, the 5-year 13.69%, the 3-year 11.44%, and the last year so far 5.7%, which still is not all that bad. And honestly, even the fact that SCHD's holding breakdown aren't all my favorite companies across the entire stock market, the ETF's performance and methodology has not really disappointed considering the ETF has been growing pretty consistently over time, pays a nice starting dividend yield, and has been growing the dividends consistently. For example, as of right now, SCHD is paying around 65 cents or so per quarter, and around 10 years ago, we're talking 20 or 23 cents per quarter per share. Now, the last high quality dividend growth ETF that's very popular and for good reason is ticker symbol DGRO, or the iShares Core Dividend Growth ETF. Now, on DGRO's website, it says why DGRO. DGRO offers low cost exposure to US stocks focused on dividend growth. And looking at DGRO's performance since around 2014, this ETF also has grown pretty good, up almost 100% without including dividends. Now, DGRO does have the highest expense ratio out of all the ETFs we went through in this video at 0.08%, but still more or less not all that bad. Now, DGRO honestly has a very well balanced basket of holdings, the top 10 holdings being things like Microsoft, Apple, JP Morgan, ExxonMobil, Johnson & Johnson, abbvie, Chevron, Procter & Gamble, Pfizer, and United Health Group. And of course, between SCHD, VIG, and DGRO, there is of course some overlap as far as top 10 holdings, but DGRO has around 430 different stocks in the portfolio, which makes it very diversified, more diversified than SCHD, but not quite as much as VIG. Also important to note, DGRO's top sectors are things like healthcare, financials, technologies number 3, industrials number 4, consumer defensive number 5, then a small amount of utilities, energy, consumer cyclical, basic material, and communication. Now, DGRO's dividend yield is basically right in between that of VIG and SCHD, which makes it a good option for the investors that are sort of on the fence of both of them, with around a 2.5% starting forward dividend yield, and also some very healthy dividend growth. We're talking 12% dividend growth over the last year, 8% over the last 3 years, and almost 10% over the last 5 years. DGRO definitely lives up to its name, paying a nice starting dividend, but also growing the dividend very consistently, at least it has historically so far. So now that we dug into the VIG ETF, SCHD, and DGRO, a lot of you might be watching this saying, well, they all seem pretty good. Which one has done the best over time, and which one should I buy? Well, as far as historical performance goes, over the last year-to-date time frame, DGRO is up 1.88%, VIG is up 15.49%, and SCHD is down 4.39%. Now, just a side note, the metric here that we're using is total return. So this is price return plus dividends included. So interestingly enough, even though SCHD does pay the biggest dividend yield out of all three of these, SCHD has performed the worst year to date. Now, on the 1 year time frame, DGRO is up 4.39%, VIG is up 16.32%, and SCHD is down almost 2%. But on the last 3 year time frame, things changed a little bit. DGRO is up around 30%, VIG is up around 35%, and SCHD is up 34.47%, almost touching that of VIG. Now lastly, on the 5 year time frame, VIG is still number 1, up 72.23%, SCHD is number 2 at 62.49%, and DGRO is up 58.19%. So out of all three of these ETFs, which is the best one to buy right now and why? When it comes to the best ETF to buy, it's of course going to have to do with things like with your personal investing strategy. If you favor maybe a little bit higher dividend yield, or maybe you want a little bit more growth potential. It's going to of course depend on what you're looking for your portfolio and sort of a personal decision. But for me personally, I do think that SCHD, being beat up the way that it has been over the last year, does have not only some growth potential, but also is going to see some nice dividend increases over the next few quarters. And for those reasons, I've been loading up on a ton of shares of SCHD, locking in around a 4% starting dividend yield for my dividend growth portfolio. But lastly, I want to hear from you guys down below, out of DGRO, VIG, and SCHD. If you could only hold on to one of these ETFs forever, which one would it be and why? Comment down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.